This is the 5 minutes chart of Nifty. Market gap down, and then for more than, I would say, an hour, it stayed in that zone. It did show a breakdown. If we see this particular candle, it kind of broke down from this zone. And there are a lot of sellers who started to sell as soon as that candle came. And then right in the second candle, if we see, even this particular candle is not very bullish because it did not close above the highs of this particular candle. So a lot of sellers would have added their position here as well. And in this entire time, I would say people would have followed this trend line and would have sold after this candle, after this candle. And right after the news came, guys, for the unchanged repo rate, this particular big candle was formed. Just in 5 minutes, you can see what a huge candle. And it would have taken the stop loss of all the sellers of today and people who sold yesterday. All of their stop losses were taken out today. Now what is happening is, now how do we plan the trade for today? Trade for today, people who are buying the breakouts, they obviously can put their stop losses here or below these candles, and those stop losses are still intact. But look at the momentum. It's very, very slow. I mean, obviously today's is expiry, the option will lose its value, and if the momentum is so slow, then obviously you cannot make a lot of money. And people who have entered a positive, or I would say a bullish position in this zone, in the anticipation that it will go up, only they are in profits right now. Otherwise, it was pretty impossible to catch this particular move unless you enter as soon as the price starts to cross the previous highs, which again will trap you in most of the cases rather than giving you profits. But other than that, I don't think there is a pretty good entry that I could find here. Of course, my trading style probably is different as compared to other styles. For me, the best buying position would be around this zone, which is 17,540 to 17,510. This 30 rupees zone is going to be a good buying area. If the market slowly and gradually comes down to this area, and then if there is some sort of trendline breakout, I can go long there. Or if the market continues to go up, let's say if it follows this trend line and if it slowly and gradually continues to go up, and then if it starts to come down, then this particular closing area, which is currently is going to be a support, if it comes down to this area and then if it shows some kind of price reversal, that is where I'm going to go long. Otherwise, I'm not going to short this market, though it is around the resistance zone, which we discussed yesterday, 17,600 to 17,620, zone. This is a resistance zone as we have marked it already. Though it is around the resistance zone, unless we see some sort of reversal pattern, some sort of sideways movement here, attempt to break, and then if it breaks down, unless we see a reversal pattern, going short is going to be very risky right now. So we have to plan the long positions, and we'll have to plan in such a way that we buy around the support areas, because we are option buyers and we have to have a very good level from where we can get momentum. So let's see how the market turns out, guys. This is exactly what I was worried about. The stop losses have been taken out by one single candle. As you can see, this single candle took the stop losses, which were here, and here. And people who bought at these candles, they probably got scared and they have already squared off their positions. So this is usually what happens when the market is getting saturated, in a very sideways movement. If slowly and steadily it is going up, the fall is usually very steep. And it was not followed through, which means that a lot of trapping is going on. The very next candle you can see is a huge one, which means even the sellers got trapped. And right now, it's again in a sideways zone. So it's better to stay away from such markets unless a good structure forms. It's better not to enter these markets.